Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, September 30th, end of the month, end of the quarter, and it is a nice coming weekend here. Hey, we got a bunch of economic news releases to go over today, and we do got some important ones, so stay tuned here. We'll start off with the personal income for the month of August. So we had back in July, we had a 0.4% increase in personal income, which of course we all like to see everybody making more money. Forecast supposed to taper it down a little bit to 0.2%. It came in right at expectations, so nice forecast right there. However, we also got the consumer spending side, so now we got people making money, but we also got the spending side of things, and we had a nice increase again in July at 0.4%, and forecast like income was at 0.2%, and it came at zero. So it's kind of telling us that people obviously are holding on to their money or saving money, even though they're making a little bit more money. So, and then of course we got corn. So what that is, it's the personal consumption expenditure or PCE, and then when you strip out the food and energy, which creates the volatility, it gives us the core inflation. This is the Fed's favorite gauge for inflation. So this one definitely is important data here today. So the last reading we had back in July was at 0.1% increase. And the forecast for August is supposed to be 0.2%. It came in right at forecast. So what does this mean? It gives us a year-over-year reading of a 1.7. We've been stuck at 1.6 for a while now, and it just inched higher a little bit to 1.7. The Fed's been having this target rate of 2% year-over-year, which they think will get there in the next 2 to 3 years. So this brings us a little bit closer to their target of a higher inflation of 2%. This may give them, more reason to go ahead and raise interest rates in December. So this is something to keep an eye on here. We got manufacturing data here out of Chicago, which is the Chicago PMI. So back in August, we had a 51.5%. So what that means is anything above 50 is considered expansion. So it's barely an expansion at 51.5, and anything below that becomes what they call contraction. And it came in surprising. It came up a little bit higher at 54.2, so it picked up a little bit in September, which is obviously very good news. We also got consumer sentiment. So our initial reading for the month of September, we get two readings here. The initial one came in at 89.8, and the forecast came in at 90, and it came in a little bit higher. So people are feeling pretty good, as we saw with the consumer confidence, about where things are at. Because remember, if you remember earlier, we had 104 on the consumer confidence. So good overall data here today, which is going to really make obviously the stock market and everyone happy. Of course, they'd like to see more on the consumer spending because people aren't spending money. The economy is not moving along, and we can't create jobs. So let's go ahead and take a look here. And again, as we mentioned, the stock market's up. Now, yesterday, late in the day, it took a turn for the worse and closed down over, like the Dow was down over 100 yesterday. And that was because a late report came out that on the Deutsche Bank, there was some news that came out that a lot of people are pulling back on their business with Deutsche Bank because of the concern that it could basically fail. And especially when there was a report earlier that that German government was not going to help them out, and they're a very large bank. They're the fourth largest in Europe, and obviously that's a very big. They're comparing it to basically a Shears and Lehman back when we had our bankruptcy, when they closed their doors back in 2008. So that's what it's being kind of compared to. They have their groups basically on every single bank, even our American large banks here. They have, there's a lot of business between them, and this is a big investor in even the mortgage-backed securities. Now, part of it comes out is that the DOJ, Department of Justice, wants to fine them $14 billion, and they're basically trying to negotiate. Now, today it's better news that now the report came out of J.P. Morgan Chase that most likely the fine will come in much lower, about $5.4 billion. So people are feeling a little bit better about the position maybe of Deutsche Bank, where things are at, that maybe that $14 billion won't be a hard number. Maybe it could be negotiated down to $5.4 billion. Now, of course, this is going to have a trickle-down effect with other European banks that were also played a role in it. Deutsche Bank is just the beginning of this. And as a result, as we know, a lot of banks in Europe they're doing negative interest rates over there. So they're already struggling a little bit over there, and it's this could potentially hurt it even further with the banking system over in Europe, which of course will have a trickle effect on the global level as well. So let's go ahead and look at the bond market, see what's going on over here. Now, as a result, that late day rally, that late day drop on the stock market, all that money went into the bond market. So we had a nice little rally here and an improvement on our interest rates. So we ended up closing much higher, even touched off the ceiling there and pulled back a little bit. Today we started higher, which is obviously a good sign, but now we've pulled back because of the rally in the stock market. A lot of the money's coming in. Now as you can see, we even touched off the 10-day moving average. So we're off of so far today we're off of our lows and pulled back. So right now we're down about 19 basis points from where we left off yesterday. But we had a rate, because it dropped so much, that we had a alert to basically lock in, primarily because they thought maybe it could even drop further because of the rally in the stock market here. So just be a little cautious here. We may kind of be in this sideways pattern for a little bit, and then at one point get squeezed either forward or bottom. But we haven't really been above this level here. It's been a pretty strong level all year. So the only time we've been above it, it was very short-lived. It was just after the Brexit announcement. So be very cautious. If you are looking to refinance or anything, now is a really good time to kind of get in, as we are at pretty much our best levels all year. All right, folks, you guys have a great weekend, and we'll see you guys on Monday. And again, this is rates are a little bit worse where we left off on Friday. Just kind of give you a heads up. All right, have a wonderful weekend. Thanks again for watching. Take care.